Hey guys, what's up? How are you guys doing today? Good? Welcome back. What's up, folks? Luis Alvarado. What's up, bro? Sue Taylors. Jermaine Wells. CFLO. Davidson Valier. Larry Johnson. GLD, yeah. Let's go over GLD. Today, GLD closed right below the 5 DMA. Can you guys hear me or see me? Yeah. I don't know why, but my stream always seems to be lagging for myself. I don't know why. Danny, Paul, Hito, Faceman. There you go. There I am. What's up, folks? Hello. From the beautiful city of Charlotte in North Carolina. O'Dary, AA, Cooper, McMullen. McMullen is always around when I go live. Thanks, bro, for always being there. Larry Johnson. 4:47. I'm starting the stream later than usual because I am involved in 2 trades after hours. Yeah, I just grabbed some shares of a firm and Cloudflare. So you guys know that I am actively trading earnings reports, not with puts or calls. That's gambling. I don't do that. I trade earnings reports with shares. I wait for the report to come out. I take a look at the estimates. And if the price action matches whatever any given company is reporting, I get shares. As of now, I am making some money with a firm. And I think I'm breaking even with Cloudflare. Let me take a look at that. So that's why I'm starting the stream 20 minutes late, guys. So sorry about that. Yeah, I'm pretty much breaking even with Cloudflare. So I have to keep an eye on these 2 stocks throughout the stream. So Sam K.O., Esteban Lopez, Esteban Lopez. I choose life. Ana Escobar, what's up, guys? Welcome. So please drop a comment down below and let me know what stocks you want me to go over. I already have some requests here. So you guys are already asking about Tessie, Nvidia, Meta. That's okay. Awesome. So let's get into this. Another green day across the board, guys. Today we had a tricky close. And I was telling you guys about on Discord today. So the Russell 2000 went up 1.85%. The Nasdaq went up 1.07%. The S&P 500, or the SPY, as you guys know it, went up 0.58%. And the Dow Jones went up, how many points? 254 points, up 0.62%. A very solid day. Today we had another narrow-ranging trading session, guys. It wasn't a very generous session in order to try to take short-term trades, other than the Trump pump that we saw at noon when he was signing the quote-unquote trade deal with the United Kingdom. Other than that pump, the market didn't do much today, to be honest with you. So, and I know that in you guys' case, most of you guys are scalping and trying to trade 0-day to expiration options. So yeah, it wasn't a very generous trading session if you are trying to day trade. Let's just put it that way. I took a day trade actually with Upstart, and I left 2 other trades running until tomorrow. If we take a look, guys, at the 11 sectors that trade inside the S&P 500 today, most of them in positive territory. And when we dissect what happened with the 11 sectors that trade inside the S&P 500, as I just said, we can tell that today we had a risk-on day. Why is it? Take a look at healthcare, XLV. This was the worst performing sector today, went down 0.90%, a super defensive sector. Then we had utilities, XLU, going down 0.80%, another very defensive sector, or a sector that is usually a beneficiary of a situation when the markets have some sort of risk of feeling. And take a look at consumer staples, another defensive sector, which went down today 0.12%. But we had industrials going up 1.38%, materials up 1.33%, energy up 1.32%, consumer discretionary up 1.18%, and the tech sector, which is you guys' favorite sector, went up 0.95%. I was telling you guys on Discord today about a very important level in the Qs. And by the way, let me ask you guys, what index is the Qs tracking? Do you guys happen to know that? So the Qs, QQQQ, is simply an ETF that is tracking an index. What index is it, guys? I like when you watch my streams and there you go. Aisha da Costa, NASDAQ 100, that is right. What's the ticker symbol of the NASDAQ 100? No, but not the NASDAQ, the NASDAQ 100. No. Faceman or Petimac. We have the NASDAQ Composite, but we also have the NASDAQ 100. The index that the Qs track is the NDX, the NASDAQ 100. Correct. You need to add 100. It isn't the same. So, take a look at these guys. The Qs, or the NDX, the NASDAQ 100, was the first important index that broke the 200 DMA to the downside. It is a heavy tech index. That is right. Correct. Exactly. So take a look at this red line, guys. This is a very important moving average. Super important moving average, which is widely used by institutions, the 200-day moving average. So the NDX was the first important index that broke the 200-day moving average to the downside. This was back in early March. You guys know that we, for the most part, we have been seeing in the markets a corrective process that started out in mid-February. So the first, again, important index that broke the 200-day moving average to the downside was the NDX, the Qs. And today, take a look, we saw a second test of the 200-day moving average. Take a look at this. We had a first test. This was back on May 2nd. And today we had a second test, an unsuccessful one, I should say, of the 200-day moving average at $491.20. Could this be some sort of double top? We'll see about that. It is too early to tell, right? But we need two factors. So there are two very important factors here, guys, that we need to coincide for the markets to be able to keep going higher. First of all, let me zoom out here a bit. Let me see. Take a look. A bit above the 200-day moving average, in the case of the Qs, we have this blue line. This is a very important moving average as well. This is the 100 DMA. Super important. I would say that, arguably, these two moving averages are the most important moving averages out there, widely used by institutions. So, the 200 DMA is signaling as of now something like $491.50, and a bit above the 200 DMA, we happen to find the 100-day moving average, which as of now is signaling $497. Say that the Qs can burst above $497. So say that the bulls can recapture both moving averages, the 200 and the 100, and on top of that, we see the SPY doing the same. Let me pull up here a 4-hour chart of the SPY. Take a look. Look at the 200-day moving average in the case of the SPY, guys. $573.20. And slightly above that moving average, we find the 100 DMA. It is signaling $576. So the SPY above those two moving averages, so say above $577, $578, plus the Qs above also those two moving averages that I just pointed out. So say that the Qs can consolidate above $499, $500. I think that might be signaling that the bulls are finally off to the races. And mind you guys, take a look at the slope of the 100 DMA. It is downward sloping. It is putting downwards pressure over the Qs. And take a look at the slope of the 200-day moving average. It is also downward sloping, slightly, but downward sloping at the end of the day. From a pure technical standpoint, for us to consider that both the Qs and the SPY finally reversed their current downtrend, we need to see both indices with the 100 DMA and the 200 DMA upward sloping. For me, from a pure technical standpoint, it will be able to say, like, okay, this is it. We have a change in the major trend of the Qs and the SPY. But both indices, from a pure technical standpoint, are still guilty until proven innocent below the 100 and the 200 DMA. In minor time frames, we are seeing positive development. What am I talking about? Take a look at the 5-day moving average, 5 DMA, this white line that I am pointing out with my mouse. It is upward sloping. That implies that in minor time frames, buyers have made some very decent progress in the case of the Qs, and the same goes for the SPY, guys. Let me pull up here the 4-hour chart. And look. As you guys can see, this white line is upward sloping. So very good job for the bulls. Very, very good job for the bulls, but they still have some work to do here. For us to consider both the SPY and the Qs innocent until proven guilty. As of now, is the opposite. Despite the fact that in minor time frames, we are seeing, as of now, very encouraging developments. Let's just put it that way. So we'll see what happens, guys. You know that I am pretty much calling out levels of interest in the case of the SPY throughout the whole training session. So you don't need to be worried about the SPY, because as you guys can see, and keep in mind, guys, that today as I just said, we had a boring training session for the most part. And take a look at all the information that I posted throughout this session today, guys. Take a look. My first post came out at 6 a.m. From 6 a.m., take a look at how much information I was providing you until, what was the time of my last post? 3:20 p.m. So don't worry about the SPY, because I am very active throughout the training sessions, letting you guys know the levels of interest in the SPY. But we cannot go over individual stocks without first taking a look at the major indices in order to try to have a better understanding about where the markets could be possibly headed to. So we have more people joining the stream. Eric Rosenkrantz. There you go. Jimmy Jones. A la orden. Anytime. Okay. Jimmy, these are daily moving averages. So I don't need to pull up a daily chart in order to see these moving averages, because these are daily moving averages. So they signal the same levels regardless of the time frame. Because when you say a SPY 2 on the daily, you're talking about a simple moving average on the daily chart. The moving averages that I use are daily moving averages. So they signal the same levels regardless of the time frame. For instance, take a look at the 100. My 100-day moving average on a 4-hour chart is signaling $576. Let's just round this up. If I pull up here a 5-day, 5-minute, I don't get the, let me see. Let me pull up here a 1-hour chart. No, I don't get it. Let me pull up, let me see. I don't know, the daily, why not? Take a look. The same level, $576, the very same level, because I use daily moving averages. Let me see if I can show you any other moving average here so you can take a look at the difference. Take a look at the 5 DMA, the white line. My 5-day moving average signals, as of now, in the case of the SPY, $563. If I pull up a 5-day, 5-minute, take a look. $563, the same level. Yep. How about that, huh? Okay, so what stock should we be doing first? Let me see. Palantir. Why not? Let's go over Palantir. I'll take it. There you go. PLTR. So it went up 8% today. It went on a tear, guys, today, Palantir, and it closed the trading session at $120. Guys, so we had people calling out a double bottom a few days ago. What a pie in the face. They were delivered. What double bottom? Sorry, double top. I said double bottom, right? I'm very tired at this time of the day. So a few days ago, guys, we had a lot of people calling out a double top on Palantir. Where the heck is a double top on Palantir? Something that I should highlight here, guys. And this, I don't know why this is some sort of secret about trading. Most technical patterns do not work out. Did you guys know that? Who was aware of that, guys? Have you seen a lot of traders? Oh, this is a double bottom. Oh, this is a double top. Oh, this is a rising wedge. Oh, this is a falling wedge. The vast majority of technical patterns do not work out. If you trade based, for the most part, on technical patterns, you will end up losing a lot of money, guys. Keep that in mind. Keep that in mind. So, a few days ago, oh, this is a double top, and Palantir is going back to $80 or whatever. Take a look. So, Palantir closed today's trading session above the 5-day moving average. Take a look. Let me draw a line here. And you guys know that I use the 5 DMA, or the 5-day moving average, in order to determine who is in control of minor time frames. In the case of Palantir, this is a stock that is under the total control of buyers. No doubt about it, guys. Take a look. Or take a look. Above a rising 200-day moving average, upward sloping 100, 50, 20 moving average. All of these moving averages are upward sloping. They are pushing price up. And on top of that, we had a retracement once Palantir reported their earnings a few days ago. That was on Monday, I think. Yeah, Palantir reported earnings on Monday, right? Yeah. So the stock fell off a cliff, and take a look at the spot that the bulls were able to find support at, guys. Let me zoom in here. Take a look. Take a look at this pink line. This is the 20-day moving average. It is upward sloping. It is pushing price up. And take a look at how Palantir went from $124 down to $105, and there wasn't need for the 20-day moving average to be even tested, guys. Take a look. Palantir got close to the 20 DMA. It was like, I don't know, less than 1% above the 20 DMA. And the fact that this moving average is upward sloping ended up pushing price up. The slope of the moving averages is very important. Super important. So in my case, would I trade Palantir here? I don't know, guys. So the chart looks very bullish, but above $100, I am being careful with Palantir, guys. Because I think, and I told you guys this last week, I think that this whole situation of tariffs and the negative impact that tariffs could have over the economy in the upcoming weeks and months, I think that danger is still there. And if something unexpected happens, And we happen to see the markets once again rotating from risk on, which was the trading session that we saw today for the most part, into risk off. These kind of higher multiple stocks are the ones that get hit the most when the markets panic for whatever reason, right? So above $100, I'm being careful with Palantir, but mind you guys, from a pure technical standpoint, a potential process of consolidation of Palantir above the 5 DMA, 5-day moving average, so above $117, could be opening the door for a test of, why not, all-time highs in the case of Palantir, near $125. This is a very good-looking chart, a chart that is under the absolute control of buyers, and while Palantir remains above $117, I think that higher prices are coming up for the Messi of artificial intelligence. It is possible. Yeah. This is a very good looking chart. Say that Palantir breaks the 5 DMA to the downside and we see profit taking here, or I don't know, or we see Palantir going down. Why not? This is a very volatile stock, so it could easily go down on any given trading session, $10 or $15. What would be the spot that I would be interested in buying the dip on Palantir? I would be keeping an eye on this upward sloping 20 DMA, 20-day moving average, which as of now is signaling $106. It is upward sloping, it is pushing price up, and on top of that, this 20 DMA is coinciding with a previous level of support for the Messi of artificial intelligence back from May 6th. I would be a buyer of Palantir at $105 approximately. But I am aware of the fact that the chart looks very good and that maybe if the bulls of Palantir can consolidate above $170, if that were the case, this technical chart could be attracting more buyers into it, and we could have higher prices in the case of the Messi of artificial intelligence, according to the knives. And if we take a look at the market structure of Palantir, let's see. What do we see here? PLTR. Palantir, bro. That's what the Palantir pumpers say on YouTube. Take a look at this market structure, guys. Unbelievable. This is a market structure chart. So what you guys see on top is the demand, buyers, and at the bottom you guys can see the supply. Take a look at the demand, guys. It is through the F roof. And the roof is on fire. Take a look. And take a look at the supply. Demand, buyers, supply, sellers. The supply is going down. The demand is going up. Wow. From a technical standpoint and from a market structure standpoint, I don't see any reason whatsoever for Palantir to don't hit all-time highs anytime soon, guys. I think that we have all-time highs coming up for Palantir sooner rather than later. And if that isn't the case, I am a buyer of PLTR at this upward sloping 20 DMA at $105. That would be my entry point more likely than not. Is DMA on TradingView? I think it is. This is Thinkorswim. And I only use TradingViews for anchored VWAPs, for anchored volume weighted average price lines. Yep. What about Apple? Let's take a look at Apple. Come on, Affirm, go higher. I have a position in Affirm that I would like to close today. Why not? So yesterday we got the news that Apple might change the default search engine on iPhones, right? Because as of now, I don't use iPhone, guys, but I think that the default search engine is Google, right? And both stocks took a hit, Apple and Google. But let me ask you, in the case of Google, that was bad news, right? Obviously, because, most of the revenue that Google makes comes from the search engine. But in the case of Apple, guys, what do you guys think? Apple took a hit on the news of Google. Why is it? Do you happen to have any idea? This is a very ugly looking chart, guys. Apple went up today 0.63% and it closed the trading session at $197. A major downtrend, guys, below the 100, the 200-day moving average. The 50 DMA is downward sloping 5 DMA. Remember, my 5-day moving average is the white line or is represented in white. And Apple, as of now, is also below the 20-day moving average. This is a technical chart that is suggesting lower prices. Absolutely broken from a technical standpoint. So, in my case, guys, I rarely ever trade stocks below the 20 and the 5-day moving average. I mean, there could be an exception to the rule, I guess, here and there, but for the most part, I don't do it. I don't like trading downtrends. So, in my opinion, I might consider trading Apple or going long Apple if the bulls show some sort of strength. Some strength. Show me strength. Because I don't buy dips. I buy strength after dips. Or after the dip. So I would rather see an Apple above $202. And $200 is a fat number, so it is, from a psychological standpoint, an important level for Apple. So say that Apple closes candles above $202, so above the 20-day moving average and the 5-day moving average, I might be thinking about maybe giving it a shot up to the downward sloping 50 DMA at $211. We could see some sort of relief rally here, guys. This stock is a no-touch. Be careful, guys. This is a no-touch below the 20-day moving average and the 5 DMA. So the 5 DMA is signaling as of now $199. Be careful. The short is broken. So say that, I don't know, we start a position on Apple above $202, from $202 up to the level that coincides with the downward sloping 50 DMA at $211. This could represent a 3.52% trade. Nothing to sneeze at. Below $199, a no touch, in my opinion. A very ugly looking short. Very, very ugly looking short for Apple. Let me take a look at the market structure of Apple. By the way, I asked you guys a question. So, why Apple was negatively affected by the news of Google? Does anyone know? What is it? Apple is announcing that maybe, I don't know, later on down the road, the default search engine on the iPhone will no longer be Google. So it is bad news for Google. Why was that bad news for Apple in the first place? Does anyone know? There you go, Joseph. That is the answer. Because Google pays billions for the default search. That is correct. Correct. So what does that imply, guys? That ideally, for Apple to catch a break here, we should see Google catching a break as well. Ideally. There could be some sort of correlation there. Maybe the market say like, I don't know, Apple will not be dumping Google as the default search engine, I don't know, within the next year. So maybe this is something that is going to happen 1 year out, 2 years out. So let's buy the dip on Apple. So there could be some sort of correlation there. Okay. Take a look at the market structure of Apple, guys. Exactly the opposite of Palantir, bro. Take a look at the demand. It is collapsing. And well, the supply is also going down, but you never want to go long, guys. A stock which demand is going down. Take a look at the demand. It's falling off a cliff. And we can actually reconcile this poor market structure chart with this 4-hour chart of Apple. Why? Because we can see over here a downward sloping 5-day moving average. This is a technical chart that is under the control of sellers. So you should avoid trading Apple, especially below $202. Let me take a look at some anchor VWAPs here in the case of Apple, guys. AAPL, what do we see here? AAPL, let's see. And so, if any of you wanted to kind of try to be a superhero here and try to catch a bottom on Apple, I will drop I am going to tell you guys a level, but I wouldn't be a buyer down there. But take a look at this anchor VWAP, guys. This is an anchored volume weighted average price line that comes from where? From the first trading session of 2023. Take a look. What message is this AVWAP or this anchored volume weighted average price line sending us, guys? Well, that the average market participant that started a position on Apple on the first trading session of 2023, go figure, guys, so a long time ago, as of now has an average price of $190. So this is a potential level of support at which these market participants could be defending price and therefore becoming a potential level of demand rather than supply. $190. Would I be willing to buy the dip on Apple at $190? No, hell no. No way. But I just let you guys know. We have a lot of overhead supply here, guys. So we have a lot of buyers trapped all over the place. This is bag holder central. And just to set an example here, take a look at this anchored volume weighted average price line that comes from all-time highs in the case of Apple, guys. So if we take a look at an AVWAP that comes from $260, Apple reached $260 back on December 26th. We get an average price of $218. So what message is this AVWAP sending us? Well, that the average market participant that started a position on Apple when this stock hit all-time highs back in December of last year has an average price as of now of $218. So these guys are losing a lot of money, and in my opinion, and from a psychological standpoint, they are very likely to act as a level of supply rather than as a level of demand if Apple happens to hit or if Apple happens to reach $218, say soon. I don't know, next week or I don't know, the week after that. So we have a lot of buyers trapped all over the place. So if you start the trade on Apple and the trade happens to go in your favor right away, don't get too greedy with those gains. Because this stock, if we happen to see a consistent process of recovery, in the case of Apple, that process of recovery might be a tricky one, guys. We have a lot of buyers trapped all over the place, so we should see a lot of pullbacks on the way up. Whenever Apple goes back up again, if that ever happens again. That sounded very bearish. There you go. There you go. What do you get us about why do you get us on about zero DTE? Most zero DTE traders lose money, Howard. And you know what makes me sad, Howard? Most of you guys have small portfolios. And your main mission is protecting your capital. How would I define a small portfolio, guys? And this is going to hurt. In my opinion, guys, a small portfolio is any portfolio which total value is below $40,000. That is a small portfolio. Most of you guys have small portfolios. You should not be trading zero DTs. You shouldn't. You just shouldn't, guys. You should be swing trading, buying options that expire 2 or 3 months out. Yes, I know that this hurts. Yeah, I know that this hurts. But guys, the few traders out there that are successful, that are actually successful, trading 0 day to expiration options, have very big portfolios, guys. I am talking about 200,000, 300,000, 400,000. And why the size of the portfolio matters? Because they can, so those trades are super volatile and super violent. And they have the luxury of averaging down as much as possible in order to at least break even on a losing position. Most of you guys don't have that luxury. you should not be trading 0 day to expiration options. Yeah. Your main mission, guys, and most of you guys are newies in the business, is protecting your capital. Joseph Johnson says, facts. Fred Wenson got cooked. Yes. Yeah. Of course. If it goes against you, yeah, you didn't. I mean, it is hard to recover, of course, because you didn't have time. You didn't have time, guys. And most of you guys are trading options. You should get familiar with the concept of extrinsic value, with the concept of time. That's just an advice, guys. Take it if you want, and you should. You should take it. Yeah, for real. Okay, so what other requests we have here? Nike. Let's go. Let's take a look at Nike, guys. What a garbage stock. What a piece of garbage, guys. Take a look. So Nike. Let me see. And I have an issue with the N letter of my laptop. There you go. Nike. Okay. What a disaster, guys. What a disaster. I mean, downward sloping 200 DMA, downward sloping 150 DMA. We can make a case here, guys. We can try to make a case here that in minor time frames, buyers are showing a bit of strength. Why do I say that? Well, because the 5-day moving average, the white line that I am pointing out with my mouse, is trying to go up. It is trying to rise. That is a bit positive. Let's just put it that way. But guys, can you guys figure this? Where's the all-time highs of Nike, guys? Take a look at this. $131. This stock was pretty much cut in half. It is trading as of now at $58. Can you guys figure how many buyers are trapped all over the place here? There's no reason, guys, in my opinion, in my humble opinion, to try to guess a bottom here. There's no reason. I wouldn't touch Nike, guys, with a 10-foot pole, guys. There's no chance. I could maybe, I don't know, tell you that, okay, if Nike consolidates above the 5 DMA, or if Nike is able to consolidate above $58, maybe the door could open for a test of the downward sloping 50 DMA at $64. But in general terms, guys, my advice to you is trying to stay away from downtrends. There could be exceptions to the rule, but in my opinion, this wouldn't be the exception to the rule. Sometimes here and there I trade downtrends. Guilty as charged. But most of the trades that I take are on uptrending stocks. So why would I try, guys, to go long on a stock, let's say Nike, just to set an example, that I know for a fact that is under the control of sellers. So I am contradicting the ones that are in control of the technical chart. It doesn't make any sense. Instead, I and you guys as well should be trying to go long on uptrending stocks, on stocks that are under the control of buyers and not sellers. This is a garbage stock, and on top of that, guys, this is one of the most affected stock by the tariffs narratives or the tariffs ongoing situation that we have as of now in the markets. You can make a case that, well, Alvaro, but the Treasury Secretary Scott Bessent, what a genius, right, is getting together with a Chinese delegation throughout the weekend in Switzerland, and maybe if the talks go well and we get good news about tariffs on China, maybe Nike could be a beneficiary of that situation. Maybe we can make a case about that, but I don't see any reason whatsoever in order try to take a trade on Nike, guys. This is a garbage stock. Let me take a look at the market structure. Let's see if from a market structure standpoint we see something positive or constructive here. Who knows? You never know. And take a look, guys. Demand going down, and the level of the supply is higher relative to the level of the demand. So I was thinking about actually getting puts here, guys. Say that Nike breaks the 5-day moving average to the downside, $58 approximately. And on top of that, say that sellers push through here and they are able to break the 20 DMA to the downside, $56. I would be a buyer of put options here, guys. It is a very ugly looking chart. Very ugly looking chart. And this is, needless to say, guys, bag holder central. Big time. GLD gold. I'm glad you asked. That Brown. So, guys, in order to trade GLD, I am basically using the 5 DMA. This white line. So today the bulls are trying to find support at the upward sloping 20 DMA, 20-day moving average. And I was actually keeping an eye on GLD today. Take a look at the 5 DMA. $307. Okay, so here's the deal. Listen up. I was telling the members of my Patreon today, excuse me. I was telling my guys today that buying GLD as of now, guys, it's a proxy of buying put options of the SPY. So the markets are buying gold, in this case GLD, which happens to be the ETF of gold, that tracks gold, whenever there's fear about tariffs. So say that tomorrow we get bad news. I don't know. A Chinese official says that, I don't know, that they are not very, that they don't feel optimistic about the trade talks with the Treasury Secretary throughout the weekend. And you guys see the SPY going down. If that were the case, guys, and GLD recaptures this 5-day moving average, $307, I would be a buyer of call options in the case of GLD. So GLD, guys, is, from a mechanical standpoint, inversely correlated relative to the US dollar, to the Dixie, the DXY. So that's a mechanical correlation. The Dixie goes down, the US dollar goes down, and GLD goes up. The vast majority of the time, let's just put it that way. But as of now, guys, gold is some sort of place to hide whenever or when there's fear in the markets about this narrative, about this tariff situation that we have as of now. So the markets go down, and maybe you guys don't want to buy SPY puts. Maybe you can get some weekly calls of GLD. And mind you, guys, the chart still looks very good. This is an uptrend. Upward sloping, sorry guys. Upward sloping 200, 150, 20 DMA. This is a very good looking chart. But in minor time frames, sellers started to show up because they were able to break today the 5-day moving average to the downside. But I don't know. After hours, we are seeing GLD. Oh, by the way, I got to close a position here, guys. Hold. I have a position here on, oh my God, hold. I have a position on Cloudflare and the stock is going up. Let me close this. Hold on. There you go, guys. Cloudflare going up after hours, closed. Okay, I need to, hold. I need to, okay. Hold in there, guys. Don't go anywhere. I need to post this information quickly. What is it? There you go. Don't go anywhere. I just closed a trade that I started before going live for you guys with Cloudflare, and I just made $300, guys. Net. Hold. Tier 4. Okay. 100. I'll be back, guys. So hang in there, please. I need to notify this because I'm closing the trade and I have other people on this trade with me. There you go. Okay. Perfect. So, circling back to gold. So, say that we get bad news and the markets freak out about tariffs and China and Trump, I don't know, says that Jerome Powell is a major loser and this and that. This could be a hedge, guys, to your long positions. Yeah. And above the 5-day moving average with the SPY going down, I am a buyer of GLD. $307 approximately. How can you trade after hours? Because I trade shares, Shannon. I trade shares. I just closed a trade on Cloudflare. Let me show you guys. I just made $300 after hours. Let me see if I can show you guys the screenshot. I was keeping an eye on the trade, so yeah, awesome. And yeah, I can show you guys this. I purchased 50 shares, guys, so it is on my Discord. Look. I don't gamble on earnings, guys, so this is a trade. 50 shares of Cloudflare, purchased after hours. So the report came out. I took a look at the report. I know what the markets were waiting for. I knew the most important aspects for the markets, you know, about revenue and EPS, guidance and stuff. So I ended up purchasing 50 shares, and I just closed this position, making a profit of $314. Not bad, guys. And I am also trading a firm after hours, by the way. I have a position of 50 shares as well. Yeah, but I trade earnings with shares once the report comes out. Okay, any other requests over here? Lily, Eli Lily. Let's go ahead and take a look at Lily. Take a look at this disaster, guys. It is a disaster. Lily went down today 3.25%, and it closed the trading session at $751. Guys, an absolute and monumental disaster. Below a downward sloping 5-day moving average, below the 20 DMA, 100, 50, 200 DMA. There's no reason whatsoever in order to try to buy the dip here. And on top of that, guys, this is a very important holding inside the healthcare sector. Did you guys know that? That Lily trades inside XLV, so the healthcare sector. So it is an important holding inside the healthcare sector. And as of now, we are seeing a lot of downwards pressure over the healthcare sector because, I don't know, the Trump administration is going to be cutting costs on some drugs and on Medicare or Medicaid or whatever. So the ETF effect could be affecting Lily negatively. Take a look. So do you guys remember what sector did I say that was the worst performing sector today? Do you remember? XLV, take a look. If you take a look at most of the stocks that trade inside the healthcare sector, ticker symbol XLV, you will notice that most of those stocks are in downtrends. UNH, Bristol Myers, Merck. So Lily, despite the fact that the chart looks super ugly, we can make a bear case about Lily because the chart looks ugly. It is under the control of sellers. But aside from that, guys, the sector in which Lily has an important weight is also under a lot of pressure. So you shouldn't try to trade Lily unless XLV, this sector, guys, take a look. This is the healthcare sector, starts to show signs of life, guys. Take a look. A major downtrend below all the moving averages and with a downward sloping 5 DMA. Guys, I gotta encourage you to try to learn little by little. This takes time, guys. This is a process. I've been trading for almost 8 years, but you need to start to learn the correlations that we have out there in the markets. So in my case, if I wanted to trade Lily, let me see. There you go. If I wanted to trade Lily, say that, I don't know, I mean, I also work with unusual options alerts. Say that I get a very unusual call options alert on Lily. And I say like, I don't know, maybe we have good news coming out, someone knows something here and stuff. So I wouldn't trade Lily without seeing the healthcare sector going up. If I were to make an exception to the rule and, I don't know, trade this, garbage technical short. So I wouldn't touch Lily below the 5 DMA, below $789. The short is absolutely broken under the control of sellers. And let me take a look at the market structure of Lily. Let's see, what do we see here? Eli Lily. Come on, Affirm, go up. So take a look, guys. The market structure looks ugly. I can delete these guys because I'm going to start getting questions from you about the trade of Cloudflare. Okay, so take a look at the technical chart. The demand is going down along with the supply, but you never want to see the demand or buyers going down. We can easily reconcile this technical chart in which we can see the demand going down with this 4-hour chart in which we see Lily trading below all the moving averages and below, or especially below, a downward sloping 5 DMA. Very ugly looking chart. No reason whatsoever in order to buy Lily. I'm curious about some anchor VWAPs here, guys. If any of you wants to be a hero and maybe buy the dip here on Lily, good luck with that, by the way. Let me see. Let me take a sip of Sprite here. Wow. A disaster, guys. No, nothing. Do you remember, guys, the anchor VWAP that I just showed you guys in the case of Apple? That came from the first trading session of... Oh, I said in the case of Apple... Let me see. I think that I have to take that back. I don't want to tell you guys information that is inaccurate. So Apple, let me see. Apple... So this anchor VWAP that I just told you guys about at $190. So this comes from... Okay, yeah, the first trading session of 2023. Okay, fair enough. Okay, in the case of Lily, guys, take a look. If we take a look at an anchor VWAP, or if we take a look at an anchored volume weighted average price line that comes from the first trading session of 2024, the first trading sessions, guys, of every year are important sessions for the markets in general terms. So in the case of Lily, if we take a look at an anchor at an AVWAP that comes from the first trading session of 2024, we get an average price of $806. So go figure, guys. The average market participant that started a position on Lily from the first trading session of 2024, again, the first the first trading sessions of any given year are important sessions, or the first week, let's just put it that way. So those market participants have, as of now, an average price of $807. They are losing money, and they are very likely to break even, or they are very likely to act as a level of supply rather than demand whenever Lily goes back up to $807. I mean, so this is a very ugly looking chart under the control of sellers, and we know for a fact that we have buyers trapped all over the place. A no touch, in my opinion, unless we see buyers showing strength here. I don't know, maybe recapturing the 200 DMA, $841. Not a good looking chart. Supply and demand shows us the volume of sellers and buyers. Yeah, correct. For the most part. So what I try to spot, what I try to see in the case of the market structure of any given stock, what I try to see here is the imbalance between buyers and sellers. If the imbalance favors sellers, I am, let's say, predisposed to short that stock rather than going long. And the opposite. If the imbalance favors buyers, so if we have a demand that is going up, when I say the demand, but when I say demand, guys, by the way, I'm talking about this blue shaded region that I am pointing out with my mouse. So if the demand is going up, I am prone to going long that stock. There you go. Let me take a sip of this, guys. It's been a long day for me, huh? Super long day. So, what other stock you want me to go over? Meta. I'm seeing. We are 55 minutes in. Wow. I speak so much bullshit, right, guys? 55 minutes and we have gone over like 5 stocks. Yeah. My explanations are super detailed. AKA, I'm speaking too much bullshit here. Okay, Meta. What is going on in the case of Meta? It went up today. This was actually one of the stocks, guys, that was on the very top of my watch list today. And I am about to tell you why. So Meta closed today's trading session at $598. Take a look at the 100 DMA. Again, guys, in my opinion, this is my personal opinion, and this is the system that has worked out for me. So that's why I am telling you this. The most important moving averages out there by a mile are the 100, this blue line, and the 200 DMA in red over here at $578. So Meta, guys, is about to burst above the 100-day moving average. Say that we have Meta bursting above the 100 DMA, which is signaling as of now $612, and closing one trading session above $612. Say that happens, guys. It would be very bullish. Why is it? Well, because if that were the case, Meta would be bursting above all the moving averages, the 100, the 50, the 220. We can also see over here an upward sloping 5-day moving average. But on top of that, Meta would be making a brand new higher high. Take a look. Higher highs, higher lows. And take a look at how the 5-day moving average has been acting as support to the penny. Look, this white line, guys. Take a look at how many times this 5DMA, this upward sloping 5DMA, has been acting as support on multiple occasions. So what message is this upward sloping 5DMA sending us? That buyers have been defending price in minor time frames. That is bullish. That is a bullish development. Higher highs, higher lows. So Meta closes one trading session, guys, above this 100 DMA, $612, making, as I just said, a brand new higher high. I am going long this stock. I think that could be suggesting to me that we have higher prices coming up for Meta, more likely than not. Let me take a look at the market structure of Meta. Let's see. There you go. And take a look. The demand is through the roof. Can you guys notice, guys, how we can reconcile the market structure charts with an upward sloping 5-day moving average? So that implies that if I have the demand rising, I can tell that a technical chart, a minor technical chart, is under the control of buyers. That is positive. That is bullish. Take a look at the 5DMA. It is upward sloping. No doubt about it. So give me a weekly close, because tomorrow is Friday, guys. Or give me 1 or 2 trading sessions with Meta closing above the 100 DMA, above $614, and I am going along this stock. It looks very good. And if we take a look at some anchor VWAPs here, guys, hey, VWAPs. Meta, let's see, what do we see here in terms of, take a look, guys. An AVWAP that comes from all-time highs. So an anchored volume weighted average price line in the case of Meta that comes from $738. Wow, I'm super tired, guys, today. I'm sorry. I am mistaking the numbers. Sorry about that. I've been streaming since 9 a.m. today, so I'm super tired as of now. Non-stop, by the way. So an anchored volume weighted average price line that comes from $738. So Meta hit $738 back in mid-February, is signaling as of now $584. This is very positive, guys. Why is it? Well, because this AV web is sending me a very important message, which is that the average market participant that started a position on Meta when this stock hit or reached its all-time high, so its highest price ever, has an average price as of now of $585. So that implies that for the most part, guys, and once Meta can burst above this 100 DMA and consolidate above $614, we don't have, and despite the fact that Meta is trading half the highs, and despite the fact that Meta is trading 18% of the highs, the second Meta consolidates above $614, we don't have very important and meaningful levels of overhead supply above the current price of Meta. Take a look. So the people that bought Meta at its highest price ever, and that obviously, average down on their positions, have an average price as of now of $584. And by the way, in case of a pullback, because Meta is trading at $595, in case of a pullback here, I would be looking for support, for potential support, that is. I never speak in absolute terms. I would be looking for, or I would be interested in seeing if this AV web that as of now is signaling $583 could be potentially acting as support. So maybe Meta could be bouncing back up from this level. So $584, I would be curious about potential support down there. And above $615, this technical chart would start to look very, but very attractive to me. How can you close the position after hours? Because I own shares. Did you guys know that you guys can trade shares after hours? Yeah. Guys, most of you are simply trading options, right? Who of you guys is trading shares? Like opening trades with, I don't know, 50 shares of Sofi or 20 shares of Sofi. Well, I'm amazed, guys. So most of you guys are exclusively trading options. But not after hours. You can do it. It is perfectly possible. I just showed you guys. I purchased 50 shares of Cloudflare after hours. You can do it. There you go, both shares and options. My advice again is to try to do both, guys. Options and shares. For instance, guys, when the markets are trading like are trading at all-time highs or near all-time highs, most of the trades that I take are with shares and not options. Yeah, you can buy shares after hours. But let me show you guys. By the way, before I finish the stream, take a look. Sofi. Take a look. This is Thinkorswim, right? Take a look. Sofi. I am going to buy a share of Sofi after hours. Take a look. I'm going to do it live for you guys. Take a look. You hit buy. And I think that most of you guys use Thinkorswim or Schwab, right? Take a look. Buy. You have to use a limit order. And you have to pick GTC extended. GTC. Take a look. I am about to buy one share of Sofi after hours. I am doing this live, guys. Take a look. A limit order and GTC extended. Confirm and send. And I am about to buy one share of Sofi. Sofi my BlowFi. By the way, I'm surprised that you guys didn't ask about Sofi today. Look. There you go. I just purchased one share of Sofi. I just did in front of you. You can do it, guys. Of course. You can do it with any broker. I do much better with shares than I do with options. There you go. Correct. I do both. Shares and options. Well, guys, I am going to wrap it up. Can you guys believe that I have been streaming since 9 a.m.? I did 2 live streams for the members of my Patreon throughout the whole trading session, and then I opened a second live stream because I trade earnings reports. I am live for you guys as of now in English, and now once I am done streaming for you, I am going to make a video, a regular YouTube video in Spanish. It's been a long day, guys. Believe me. A long, long day. And I still have a lot to do. And we are an hour and 5 minutes in. That's it, guys. I'm done. Yeah, guys, on Thursdays when I go live for you, I am really, and believe me, guys, I am really running the extra mile for you guys. I have to run the extra mile. But mind you, I'd rather going live for you than making a video, than making a regular YouTube video. Making YouTube videos sucks. Oh, I hate it, guys. You have no idea. I fucking hate it. It is awful. I am alone here in my studio talking to a camera with no interaction whatsoever. It is horrible. I hate it, but I have to do it. It is what it is, you know. So, Sofi, keep an eye on the 100 DMA. By the way, someone asked about Sofi. Keep an eye on the 100 DMA, guys. $14. If Sofi can burst above $14, it would be bursting above all the moving averages. That would be bullish, and that situation could be attracting buyers into this technical chart. Okay. Yeah, it is super nice. Interacting is super nice. So Sofi above $14 could be looking interesting. Yeah. Thank you, guys. Hey, I am going to ask you for a favor. Please go to my YouTube channel because I am streaming exclusively for you. So the comments that you drop in the live chat are not finally reflected on the video that I am going to be releasing for all of the subscribers of my YouTube channel. So please go to my YouTube channel. I don't know. Drop a comment. That really helps me with the YouTube algorithm. Hit, you guys know what to do. Hit the like button. Subscribe to the channel if you want. There you go. Thank you, guys. See you guys tomorrow and on Discord. Thank you. Enjoy the rest of your day. And remember what I always tell you. What do I always tell you at the end of my live streams? Go grab a beer. I always say the same. Go grab a beer. Life is too short, guys. Go grab a beer. Have fun. For real. At least one beer. Do me that favor. Go grab a beer. Bye, guys. Take care. Bye. Thank you. Thank you.